welcome to the May 20th weekly Forex idea from the traderguy.com. As you can see in front of you, I have the Canadian dollar Japanese yen pair. It's well known that the Bank of Japan is working against the value of the yen, and the yen itself has been falling rather precipitously against most currencies, although we have a few anomalies at the moment. For example, the Kiwi yen has not necessarily fallen apart, but because of all of the weakness in the New Zealand dollar itself, it's definitely underperformed. And that's the theme of this particular idea. The CAD yen has definitely underperformed, but at the same time, oil prices have been incredibly resilient. The Japanese import 100% of their petroleum, and obviously, Canada is an exporter. This sets up the background for a possible very bullish run. What I find interesting is that we tried to dip below the 100 level on Friday, found support there, and the next thing you know, we have a hammer. I'll go ahead and zoom in a little bit so you can see this a little more clearly. This hammer is perfect shape, and in reality, you can't really think of a better place than a nice even round number like 100 for it to appear. Now, obviously, there is a bit of resistance above um, at this area here, right around the 101 handle. That's not that uncommon to see these big areas have 50, 100 pip ranges, so that of course causes me no concern. When I look at the weekly chart, something interesting happens there as well. You see that there's a hammer. So quite frankly, if we manage to break the top of this hammer above the 101 handle, really, it looks like this pair is ready to continue going higher. We do have a significant amount of resistance there, but um, that probably will make it more choppy than anything else. I mean, obviously, it has tried to act as resistance to push prices down, and we've turned around and bought it back up. That looks like a breakout waiting to happen, quite frankly. Also, you have to keep in mind that the yen is being worked against so diligently by the Bank of Japan, so obviously that's a problem as well. More than likely, this is going to be one of those trades that grinds for a minute or two, and then when it finally does take off, it'll be a very brutal move. Obviously, a lot of pressure is building to the upside because you can see over the last several sessions, as we hit that significant resistance, uh, we would fall to 100, and right on the line, people were stepping in, with the exception of Friday. They did get a little bit below there, but it brought even more buyers in. So, for this week, I am going to be watching CAD Yen, as with all the yen related pairs, but quite frankly, this is the one I think has the best chance of playing catch up to the dollar yen explosion that we've seen recently. And part of it is just simply because it's a North American currency. You don't have to worry about like the Aussie or the Kiwi yen, where you have problems with the currency being a commodity currency per se, and that's essentially all it's played for. Plus, there are weakening numbers in Australia. This matches up the strongest economic zone at the moment, North America, against one that is being worked against, at least in the currency markets, in Japan. The Canadians, of course, are heavily reliant on the Americans for their exports. It's something like 85, 86%. So as America goes, so does Canada. And right now, America is the strongest economy out there as far as the majors are concerned. So in the end, I do believe this market goes higher. Could be a little bit of a fight. If you're a little bit more conservative, you can wait till you get above the 101 handle. Or if you want to look at it more as a long-term investment, my suspicion is that this is one of those areas that will bring in a lot of long-term money as the trend continues much higher over the next several months and, quite frankly, probably the next several years.